exciting things in the chart for those of you that are patient. The way you make money in this ecosystem, in any investment ecosystem, is to try to see these swings in sentiment and the swings in momentum. This price action on any asset, I don't care if it's the S&P 500, which has just been opening at new daily high, new all-time highs. Tesla, opening with a 7% gap the other day. I mean, insane. What we're seeing in this market right now feels like it's breaking molds, feels like it's breaking trends. We're seeing these setups that on the one hand are doomers. Oh my God, it's all going to be over. But just as we outlined before, and I forgot to get to this, and I'll get to this right now actually, is this. People are worried on the macro sense because things feel like it's all doom and gloom and how can things persist higher? But then much like my friend, Caleb Franzen highlighted the other day, is this. Look at this junk bonds. I know you're in meme coins, you're in altcoins, you're in Bitcoin. Who cares about this? Get your edge, guys. You get the edge outside of the exact asset you're looking at. And that's this. Before the stock market peaked back in 2021, junk bonds peaked in 2021 before the stock market peaked. What are junk bonds doing right now? They're breaking out to multi-year highs. The junk credit market is confirming the uptrend in the equity market, which means that we have a strong bull market signal set up going on. So yes, we're looking at Bitcoin. We're looking at, the dominance. What are the alts going to do? The others chart that is miraculously signaling patience because we've been here before. The sideways chop consolidation that were pretty big swings, but proved to be ultimately the setup before the 20x in the altcoin market back here. And what was this, 2019 into 2020? Massive setup. And yet again, we're seeing the same thing right now. We just don't notice it because we're wondering why we're not seeing 30Xs on every altcoin in our portfolio right now. But the smart money was stacking here. Smart money was stacking here. Smart money now is even saying, okay, I think it's about to be all systems go. But Drew, I see you in the wings. Let me know. You can give me a thumbs up when you want to pop in here because we're seeing some magic brewing. We got Jerome Powell coming out to give everybody a Christmas gift today. We're seeing some great stuff. And then, throw those thumbs back up, my friend, because we got to get you in the mix right now with add the backstage. Are you on stage? There you are. Dude, are you excited for today? Are you worried? Are you selling everything? Are you going all in on a new token on Pump Fund that some random guy is jumping off a bridge, lighting himself on fire doing? What are you doing?
I got $40,000 in a long going into FOMC, balls on the table. Let's go. All right. And now I'm going to talk about the long-term repercussions of what we're about to see go on today on the show. It's been a long-term theory that sounded insane. People said I was an idiot for warning them of stagflation. But here we are. We're talking about, what do you do? You got to flip it like this.
I'm trying to make you full
Let me
screen.
drive.
How do I do that?
Let me drive. All right. Just hands off the wheel.
No, but I've got to be driving too sometimes. How do I make you full screen and not just me?
Oh, just like this. So I've been warning about stagflation for about 2 years, right? And we've seen falsified jobs data over the course of the end of Joe Biden's reign over the United States. We've seen continued Bureau of Labor and Statistics data called out as fraudulent. Over 2 million jobs vanished into the abyss, never even existed, lying straight to our face and making decisions on macroeconomic movements of the United States, the world reserve currency, thus crushing currencies all around it. Now we are going into Thunderdome. Whew, we got a lot to talk about here today. Zima, where is your super chat? Let me know where your super chat is. What's up, Halo?
I just saw it. It's how high will the crypto market cap, how high is the total crypto market cap expected to go?
Mm-hmm. So in my view on the velocity of our current bull market, which we are in, I think we can hit $6 to $8 trillion market cap in aggregate, right? We're already at $4 trillion market cap. So we are but a few bullish months away from hitting those peaks that I expect. Now, is this an up-only situation? Bitcoin reserves, all of this shilling that we've heard from the U.S. government over the past few years, is it finally going to happen? The government's not coming to save your bags. I will say that. They are more interested in confiscating your bags and going after cold custody. Securing your Bitcoin on an Arculus cold storage device is the ultimate dissent against a tyrannical system. Now, we have a great partner, Arculus. Please take advantage of the power that it's given you. Okay, you could become your own bank. We got 20% off, cost you like $80 or something like that, to literally take the power out of the Federal Reserve and put it in your own hands. Own Bitcoin, right? And also Bitcoin IRA. Absolutely. Bitcoin IRA, this is where you can actually get a person on the phone to talk to you about the tax incentives of a Roth IRA, different IRA setups. You can call 877-936-7175 and get a human on the phone to talk to you about some mechanisms that you can take advantage of. If you're a long-term believer in Bitcoin, I highly recommend diversifying. Cold storage and IRA setups will really help you out with tax in the long term, right? The FOMC is coming out today. Now it's coming out, the number of what the interest rate cut is going to be, likely going to be 25 base points, right? I really, really doubt we're going to see a 50 base point cut. As you said very eloquently, Kelly, the tone of Jerome Powell is going to matter quite a bit. So, you know, the tone in the speech of Jerome Powell is going to be coming out at 2:30 today, but we got a lot of stuff to cover. Did you already touch on the DXY and the levels that the DXY is sitting at right now as we're heading into good. We are at a very, very important moment for the US dollar, right? Very important moment. And shout out to Crypto Billy up in the chat. I had an incredible conversation about God, about faith, about family last night. Was able to stay up late and spend some time with Crypto Billy. If you guys don't follow Crypto Billy, please do yourself a favor and go ahead and give him a follow here. I'm keeping the Discord chat up and available as well, because I am indeed still in the 19x long on Morpho, and it's going absolutely swimmingly. Let's go check it out. Let's go check out how much danger I'm in. Am I going to lose everything? Is Jerome Powell going to take $40,000 from my hands and transfer it to his own pocket here? Let's pull up the charts here and see. I want to show you guys. This is the stuff. If you're not in the Discover Investments Group Discord, this is what you missed. Okay. Got in at about $1.97. And now we're sitting, I think we're up by like 20% or something like that. So not too bad, not too shabby at all. Feeling good, feeling groovy about it. But now I have a lot of things that I do want to touch on in terms of news, things that matter. There's Senate Banking Committee hearings today. There's a lot of things that are happening on a legislative level in the background to, you know, actually kind of pave the path, the long-term path for Bitcoin, for crypto. I see Toshi in the chat. People bringing up Toshi. Toshi is an interesting base meme token. Definitely had, you know, a really, really good run up initially. I actually might want to look at the Toshi chart here later on today, but let's go into the juice here. At Druth Crypto on Twitter. This is where you can find all my crash outs. Here's me crashing out about the Joro spider, which I am battling currently on my land, and it will not win. I will win this battle against Joro spiders. They have doubled their numbers in just about 3 years. Okay. And these are not small spiders. They are not poisonous. They're not excessively aggressive. They're about 4 or 5 inches long. So just take that to the, put that in your pipe and smoke it. Now, God, dang, looking juicy. Let's see if we can get up to this upper echelon, back above the $2 mark on Morpho during the show. Daddy Pal, pump my bags, baby. Now, if you're not following Discover Crypto, you're doing yourself a disservice. Also, I'm live on the blockchain basement right now. Kelly Kellum of BitLab Academy and my man Veteran Crypto and Jeff. His name is Jeff at DeFi Crypto and Airdrops. Go give him some love. Follow him. This is where you can find all the mechanics behind DeFi, the education behind that, and then airdrop hunting as well. Now, Bitcoin got a struggle bus. Obviously, DZ called this out very nicely in the morning. It's taken a hell of a haircut, but we did hit the bottom echelon of my chop zone that I've had marked out here for some time and found a little bit of a bid at this level. Ethereum, flat. Okay, there is some sort of extremely strong industrial magnet that has kept Ethereum at $4,500. Probably going to see some Darth Maul candle below to like 44, maybe even 4,300, back on up, and then back to equilibrium. This $4,500 level is just like a magnet for Ethereum. But we'll look at some news, some charts, some movements to see if it's got that breakout point. Now We got to take a look at the landscape. We got to look at the forest through the trees here. Kind of red, right? Kind of red, kind of painful. Yes, it is a huge spider, Oscar. It's bothersome. Okay. I don't like running into a 6-inch spider on my face, and I've done it before. It's not a good feeling, right? A lot of red, ETH slightly green. And this is why I've kind of shifted. I really do feel like alt season is upon us. The altcoin index coming in at a 71 right now, but I love seeing that the fear and greed is flat, right? We are having a very nihilistic approach to bullish and bearishness right now across the board on crypto, which leaves plenty of room for upside for me. If we're looking at 3 incoming Federal Reserve rate cuts over the course of the remainder of the year, horrible monetary decision in the long term, excellent for risk assets in my humble opinion, right? So I'm going to be having some fun over the remainder of this year with this. Hopefully you got in position over the last few years, because I've been ranting and yelling at you to buy Bitcoin at $15,000 on up. And we've longed it all the way on up from 49K to where we are right now. So I pray that you've had the patience to stay in the market and continue stacking to get prepared for this moment right now. Is your stop loss in profit? Jelly in the Discord, yes, it is in a dollar profit. Stop loss is. So you know what? If the trade fails, I actually don't lose it. Now, liquidation has been a thing today. Liquidation heat map. Let's go have a look, see at what Binance has been doing to those leverage traders' bags. Now, we washed out about right around like $100 million here at 115.8. Seemingly trying to find a bid here actually on Bitcoin, which is very, very interesting. Not hating what I'm seeing at all on this setup. Actually, I am leaning bullish, and I am leaning towards the general thesis that we can accomplish $118,000 today. Now we got to move on to the rest of the stuff. And on you guys, I'm going to talk to you about something very, very crazy. What happened to the rock? Okay. This is not the actual rock, but it could be. The rock has now collapsed down into like my body frame size. It's rumored that he cut down the weight for a movie role, but also I'm hearing reports that he's had to back off the roids for his heart. I don't know what's true. I'm just reporting what I've heard, right? So it's interesting to see that going on. I don't think I'm ever going to really be interested in steroids. But you know what? I'm still going to watch the Rock's movie. I remember, the Rock, the Biden thing, it really kind of, what are you doing, man? Now he's kind of deflated back to reality here, and hopefully he takes care of his body. Now, for some reason, also, I found out John Cena is still following me. Saw this guy in my hometown, and he was wandering around and doing handshakes and all this stuff. I didn't even go up to say hello to him and say, hey, you follow me on Twitter, and I will never follow you back, John, because you refuse to acknowledge that Taiwan is its own country. Pandering to the CCP. Absolutely ridiculous. Could be that 80s virus. Oh, no. T-Pro, hold on. Wait a minute. Hold up. Something ain't right.
You are banned!
Jeez Louise, man, you can't catch a break. You can't catch a break here. Where do you where's that comment come from? God, we have like 7,000 people watching live on the show today. Absolutely incredible. Thank you for joining me on the show today, everyone. We are on Arena, we're on Pump, we're on X, on multiple different accounts on YouTube. Once again, we are finally out of YouTube jail. That was quite aggravating to be put in YouTube jail just for covering the Apple products. They want ultimate control. What's up, KJC? Super cool new here. What's up? All the new names. Love from India. Shout out to y'all. Good to have you here in the show. Now, let's go on to the rest of the news. Okay, I went on my little World Wrestling entertainment tangent. Now we're going to go into some price predictions on what's going to happen today. Go into it. Wrecked Fencer, Fed rate cut. This was posted yesterday, so it's today. Many TradFi experts expect a fake dump before the rally. Possible outcomes: Bitcoin dips down to $104,000 and then reverses, or Bitcoin fills the $92,000 CME gap before new all-time highs. quite a crazy prediction, right, to think about it. But if you really are backed up, we're still definitely in a bull market structure should either of these things occur. And one of my other favorite traders out there in the interwebs is Flawless. This guy's hilarious. I think he's like French or something. He's got an excellent accent here. He's thinking 25 base points, volatility chop, basically nothing. 50 base points, new all-time highs with haste, and 0 base points, ghost month turns into poverty month. Is this poverty month? I need to know. You got to tell me. You've already heard my thesis. I got my thing on the table. I've told you what I think publicly. I want to know what you guys think in the chat. Bogus 92,000 is not happening. Yes, we still do have a CME gap at $92,000. Are you closing the Morpho trade before the meeting? Well, I'm a little bit crazy. And I might not, right? Might not close it. It's already in slight profit, so I don't really feel like, because this is the moment where monetary irresponsibility meets the absolute fundamentals of altcoins in a bull market. This is a juicy time, honestly, and it takes a lot of guts to hold this trade into this meeting. I get it. But you know what? I found my position with all of my signals that I'm talking about, being very concise about in the Discover Investments Group Discord. We're also going to be working on Breakout Prop. I know Kelly was just talking about Breakout Prop. We're going to be rolling in some new traders and expanding that trader ecosystem, because you know what? If we learn the chops and apply those chops of trading in this current market, and then know when we basically flipped into a bearish sentiment, you're going to be a very, very effective monetary. You can become your own money printer, right? You can become your own money printer during bear markets. Let's see here. I want to go to the rest of these stories here. And obviously we have the Federal Reserve YouTube up here, but I'm going to be actually watching this on the website. The live starts at 2:30 p.m. If you guys see anything go live from Jerome Powell ahead of this meeting, please do drop it in the chat if you may, so we can make sure to keep eyes on all that. But we got some kind of interesting stories going on. We got Elizabeth Warren, the banking broad, Pocahontas herself, probing whether Trump's AI and crypto czar, David Sachs, has broken ethics rules. Take a look at this. There's this, God, what a weird smile. So Senator Elizabeth Warren out of Massachusetts and other prominent liberal lawmakers have turned up the heat on White House AI and crypto czar David Sachs, pressing the Trump administration official on Wednesday on whether he has overstayed his temporary post and violated ethics rules. In a letter sent to Sachs Wednesday morning and shared with Decrypt, Warren noted that as special government employee, the crypto czar is permitted to work in his position for only 130 days per year. Kind of an interesting highlight there, trying to put a little cap on the amount of time that he can sit in the seat. Any effort to stay beyond these limits imposed on you as a special government employee would raise additional ethics concerns for you and the Trump administration, particularly as it moves to implement recently enacted cryptocurrency legislation and put in place new rules for the crypto industry. And I'm getting a bunch of questions in the Discord. You know what? I know anyone that moved in on that Morpho trade at $1.97 is looking juicy right now. So you don't go poor taking profits. I'm a little nuts. I'm a little crazy. And you know what? I'm holding it, baby. That's what I'm doing. So now Warren has requested Sachs to, within the next 2 weeks, provide lawmakers with a list of days he has worked in any capacity for the Trump administration since his appointment in January, plus further details on whether he's conducted said business, including in Silicon Valley. White House did not immediately respond to Decrypt's request for comment here. Okay. Is Powell streaming on Pump? Crypto price, he says Powell is streaming on Pump. I kind of doubt that. Right? That'd be absolutely, and that's the top signal. If we see Jerome Powell start to stream on Pump Fund, I'm out. I'm selling everything. I'm selling Bitcoin. I'm selling Chainlink. I'm selling it all. If I see Jerome Powell peek his wrinkled little head onto Pump Fund, I'm out. That's it for me. This movement from Senator Elizabeth Warren likely will mean literally nothing. She has accomplished nothing in her career as a politician. She is a loud, annoying woman that accomplishes zero in her professional political career. Take that to the bank, put that in your pipe, smoke it. Okay. Now, we got some action happening with Binance. Binance is reportedly in talks with the DOJ to end its 3-year compliance monitoring requirements from the $4.3 billion settlement, which could ease regulatory pressures on the exchange per Bloomberg. This is a long time coming. The government, the US, has been going after Binance, trying to poke holes in the fabric of what Binance has been operating off of for quite some time. It hasn't really worked out. They got CZ locked up for a couple months. He put up the 4. He did a couple hundred push-ups a day, came out jacked and ready for even more. And now he's pushing forward decentralized science, among many other things in crypto. The DOJ movements against Binance, I felt this entire time, had no teeth. They were using it as a parade to keep people's heads low, keep them worried about getting involved in crypto, especially becoming the main character in crypto. We know that becoming the main character in crypto is not a good thing to accomplish. So, keeping that in mind, not too worried about it. And this is absolutely crazy. Phantom, when the dev is bald, the tech is good. It's hard to argue with this. Bald devs, bullish charts. Am I right or am I wrong? All right. Do you trust the dev more when he's bald? I mean, Walter Wright with that blue, I don't even know. Is this the guy from Solana? Holy, I think his name is. And then Bezos here. And then the bald Pump Fun Ghost. Shout out to Phantom Wallet. I mean, honestly, what Phantom Wallet has done with the user interface and the usability of the Phantom Wallet is absolutely unprecedented. They've done an incredible job doing it. I would like to see Avalanche come out with a competitor. I would like to see a bunch of different chains, but particularly I would like to see Avalanche come out with a effective effective Phantom competitor. I would really, really think that would help the Avalanche ecosystem grow and thrive. I'm bullish on Avalanche, but there's some tweaks that need to happen from point A to B to actually really get that chain off the ground. Now, something very cool that I covered last night on, I think it was on the Arena, the Avalanche SocialFi platform with my buddy Matt Malik. Shout out to you, Matt. I think he heard me yesterday. Matt Malik is the best kind of chaos I've came across in crypto, right? Absolutely fantastic human being that is. Let's go into where the juice is for Avalanche. This was really, really cool. And shout out to Veteran Crypto for calling it out. Avalanche has grown by 140% in real world assets over the last 30 days. A massive increase. There is something happening under the hood with Avalanche, and it might be under the hood with Toyota. Avalanche with these big, big numbers. We had that Toyota announcement later. I think it was like 2 or 3 weeks ago. There is a statistical, provable increase in RWA movement within the Avalanche ecosystem. There's XRP Ledger at the bottom of the list. Arbitrum at number 9. BNB right behind Avalanche. That's all. That's tough to do. Stellar coming off the top ropes. Solana, Aptos, Polygon, ZK Sync Era, and then the top being Ethereum. Just some important side notes to know where all the RWA development, where all that long-term asset tokenization is moving. Now, I do want to find a little bit of a highlight from Eleanor Tourette. I tagged this last night. Let me scroll, do some doom scrolling and see if I can locate this. Where are you? And friend of the channel, Eleanor Tourette, absolutely awesome reporter. I think she's I don't know if she's still with Fox or not, but she's an absolutely awesome human. She's an absolutely awesome human. I do want to find this. Where is it? I bookmarked too many things, you guys. I bookmarked too many things. Okay, and that's my problem. That's my problem. But Eleanor Tourette is highlighting that the Senate Banking Committee is having a meeting. They're going to be discussing different market structures for what crypto can plug into, what it can't plug into, how banks' relationships with crypto are actually going to look. And here it is: as a Republican and Democrat senators continue talks on market structure legislation, a group of leaders from several crypto firms is set to meet tomorrow, which is today, right? Go over with their meeting with several crypto leaders and major firms to set basic Senate Banking Committee leadership into a roundtable setting, according to 2 industry invitees. Some close sources here. A meeting follows more than a week of industry review on the committee's latest approach in distinguishing securities from commodities, also DeFi treatment and other key issues. I know Veteran Crypto and everyone that's heavily involved with DeFi is going to be watching this very, very closely. Let's go hop back over to the Federal Reserve website. Make sure we're not missing any of the juice. Not live yet. Not live yet. We have the announcement of what the rate cut is going to be, which is going to be 25 base points at 2. It's still going to cause chaos on the charts. It's still going to cause chaos on the charts, regardless. And then the actual press conference of Jerome Powell at 2:30. Now, I see a lot of people, I'm banking on him wearing a purple tie. I think he pretty much always wears a purple tie. So I don't think the tie is going to give us any signals, bullish or bearish. How many rate cuts this year in total? Right now, we're sitting and looking at 3 expected rate cuts over the course of 2025. Now, what 2026 is going to look like is where some of the devil in the details and some of the worries might come into play here. And I'm going to talk to you about that right before we actually go watch Jerome Powell. But I do got other crypto stuff to cover. Now, the Trump family's American Bitcoin went public on NASDAQ today. There's them hammer buying a bunch of meme coins on Pump Fund. It's great. They're having a good time. Confetti going everywhere. The Trump family's getting heavily involved in Bitcoin. They've been debanked, and it seems like they're leaning into it more than ever. I'm here for it. You know what I mean? Pump our bags. Now, when it comes to how long it's going to take for the Trump administration and or the next administration in the U.S. to start buying Bitcoin actively for a reserve, I don't think it's coming within the next few months here. I don't think that they're going to go buy the Pico top. I think they're going to talk about it. It's coming, guys. Stay on the edge of your seats. Keep tuned, right? And then they'll let the market reset back down to generalized lows. I think from the all-time high, be it 150K, 200K, I feel that Bitcoin has less downward pressure now that ETFs are in the game. I feel like Bitcoin has less downward pressure because treasuries are part of the game, but I think that it's going to be a 50% down, right? So if we hit 150K, I'll be looking for 75K. If we hit 200K, I'm going to be looking for 100. That's my general thesis as things sit right now. If things change, obviously you're going to hear about it. Let's see here. Bro, do you think we will dump then? When's then, bro? Bro, I ain't your bro, pal. I ain't your pal, bro. Let me know when it then is. My man, what's your name here? Vico Trades. A bunch of new names in the chat here. I love seeing all the new names up in the chat. Welcome to the show. Googly Moogly. Now that I've covered Trump pumping our bags and his sons up, we got to go into this. Metaplanet. This is a Japanese firm that has been leaning into Bitcoin treasuries very, very heavily. It's a relatively small firm in comparison to the other bigs that it's competing with on the stacking of Bitcoin as a treasury, a Tokyo-listed hotel group that owns $2.3 billion worth of Bitcoin said on Wednesday that its business is expanding to the U.S., but the stock slid as the top Japanese Bitcoin treasury sets up shop in Miami. They're actually kind of coming pretty close here. Let's read into this. Metaplanet, blah, 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 blah. The firm, which now owns more than 20,000 Bitcoin, that's a pretty good chunk. That's a pretty good chunk of Bitcoin, establishing a subsidiary in Miami, Florida to manage and grow incoming generational activities. According to a press release, Metaplanet said the wholly owned firm, dubbed Metaplanet Income Corp, will initially have $15 million in capital that will provide its parent company with a better opportunity to pursue derivative options and related activities that produce revenue. I like hearing that. That's the magic word right there, revenue. I'm making sure that whatever I'm investing into has very provable revenue. Okay. There's a lot of ghost chains out there. There's a lot of ghost chains that people are doing TA on, which is absolutely hard R ridiculous. You need to make sure that the product is producing revenue, right? I think that is very, very important to do. Now, that's some backstory on Metaplanet. Founded in 1999, Metaplanet managed the budget hotels across Japan, including Love Hotel. Okay. But Wednesday's announcement makes no mention of hospitality. Rather, Metaplanet said the new subsidiary will separate from its treasury operations. In second quarter, Metaplanet disclosed an operating profit of 817 million yen, I believe is their currency, $5.5 million bucks. on 1.23 billion yen or $8.4 million in total sales. So a little bit of a shift into the American market. Not surprised. I see a lot of companies investing in American markets. They see the new deal that Trump is doing right now. I'm is that the love hotels that were like here in America? They're usually like massage parlors, right? Lot lizards are a thing here in the US. What is going on with the love hotel play here? I'm going to move on from that story. Now, Nvidia, the stock extends its loss nearly 3% on the day after China banned the company from purchasing Nvidia chips. China banning internal CCP companies from getting involved in Nvidia's chips operation. I do actually want to go check out Nvidia price and see what it's looking like now that the market's open. Just a touch, just a touch. Are we just pulling back for general market expectations? Nvidia. Go here. Let's go here. All right. So it found a little bit of a bid here in this structure. Found a little bit of a bid in this structure. But honestly, like looking at these charts of the stock market, like I'm not buying this. Look at the performance has already been there, right? The time to buy Nvidia was say this dip at $100, this dip at $80. Now it's at $170. Like I'm not buying this thing. But you know what? Where Nvidia revenue is going to matter. Nvidia is basically the skeleton elephant that carries the entire Wall Street sector with it. It's now worth more than the nation of Canada or Snow Mexico, otherwise known as. So seeing them pull back just a bit, oh my God, it's the end of the world. But honestly, guys, like, can we please calm down? This thing has been absolutely ripping to the moon. A little bit of a haircut is in store. And people have been asking me, am I going to get a haircut? The answer is no. The answer is no. I'm going to grow this mullet out to, I can't believe it's not butter level. Okay. I really feel that way. I'm going to be the next butter guy. I'm going to be the next margarine salesman. God, what a weird word. Let's check back in on the FOMC. Make sure we're not missing any juice here. We got 32 minutes until the FOMC goes live. Rather the data comes out and then they go live at 2:30. So we got 32 minutes until they verify if it's going to be a 25 base point or not. And there are slight chances that we could be looking at absolute chaos. You know what? I'm here for the chaos. Let's light this candle. Let's do 50 base points. Actually, you know what? Here's what I say. Let's do 100 base points. Let's do 100 base points and light this candle. Let's let the entire world know what a Ponzi scheme the fiat currency system is. Let's let them know that you literally lied for years, not only about inflation levels, right? They've fudged the numbers on inflation levels, but they did it within the proper channels so that we can't roll that information back. But also the jobs market. And like when we ask people like, how are you doing? How's the job market feeling? Are you doing okay? The average person is not doing okay. They don't have more than $400 in their bank account to deal with emergency problems. They're using credit cards to survive. They're all-time highs in help me with my mortgage searches on Google. People are struggling. And yet they come out here, the market's strong and resilient, guys. Don't worry, it's going to be okay, right? Absolutely insane. Absolutely insane. I could go and start cursing. I feel like I sound less intelligent when I curse. And I'm trying to be a better person. I am trying to be a better person, right? Doesn't mean that I'm not going to try and make the devil afraid to be on this earth. After seeing what happened to Charlie this week, it is clearer than ever that the devil is alive and well here on earth, and I am going to aim to make him terrified. I'm going to try to let God work through me and make the devil terrified. Now let's go check out what Tom Lee is talking about with Ethereum here. Tom Lee sees the biggest winners if the Fed rate cuts happen this September. So U.S. Federal Reserve may cut interest rates, yada, yada, yada. Analysts believe this could trigger sharp gains across technology stocks and crypto. Fundstrat co-founder and Bitmine chairman Tom Lee told CNBC that NASDAQ 100, Bitcoin, and Ethereum stand to benefit the most. Federal Open Market Committee, the FOMC, meets today, and they also met tomorrow. As the last meeting, the Fed kept rates unchanged, but expectations are now leaning heavily towards an easing cycle. According to the CME exchange data, markets assign a 96.1% probability of a 25 base point cut, 3.9% a chance of a larger 50 base point cut. But that's actually, I think that these data points have shifted since they put this little article out here. So let's go straight to the source here. Let's go to the FedWatch tool. Let's go check out. Let's go check it out. So we got a 95% likelihood of 25 bips and then a 4%. So not too big of a change. Very heavily weighted towards just a quarter of a point rollback. But let's go look at October now, right? Let's look at October. Let's see how scared these little fellas are. 72% likelihood of a 25 base point cut in October on the 29th. And then a 3% chance of a 50 base point cut on October. And then December also looking juicy for another expected rate cut here at 66%. So basically, it looks like with a higher probability than not, that we're going to have 3 consecutive interest rate cuts. But the linchpin here is that they're cutting interest rates as inflation is returning. Now, there's a lot of data that I can go in and show you after I go through the rest of the altcoin news here that paints a picture of take your profits and protect your money over. Once this bull market is done, there needs to be a game plan in place to protect that value. Okay? You need to make money slowly and protect it quickly. I know that there's lots of snapshots of I turned $5 into $100 million. Don't go chasing those waterfalls. Make money slowly, protect it quickly. Let that sound resound through you as you see this altcoin market continue to move, because profits, no one goes broke taking profits, as DZ wonderfully says. Google and SWE network, is it SWE or Sway? You let me know in the chat, is it SWE or Sway? Google and Sway network teaming up on next gen payment standards. What? Why isn't Sway mooning right now? SWE network, can't decide how to call it. It's SWE, right? It's SWE. That's what I thought. SWE network is teamed up with Google, an official launch partner for the tech giant's Agentic Payments Protocol, AP2, a system designed to let artificial intelligence agents perform financial transactions on behalf of users. AI agents doing transactions for us, smoothing out the process of crypto, I think is a very beneficial movement. In general, I want to read into this to actually find out. Emir Hossein, up. Okay. Oh, where you at? God, the chat's moving fast. Up. You know, I ain't a fair weather fan. I say up. I'm long. I'm up. Now, let's look at this. Instead of just forwarding instructions, AI systems would be able to transact directly, managing balances, settle payments in real time. Developed by Mistine Labs, SWE built to deliver high-speed programmable transactions along with privacy-focused identity solutions. Its role in this AP2 marks the step towards combining blockchain infrastructure with artificial intelligence and creating a potential for automated commerce powered by both technologies. The announcement briefly pushed by SWE token price higher before the market gave up those gains. Analysis of this say the muted reaction reflects investor caution, as real-world adoption will determine how significant AP2 becomes. And the markets are they're not feeling good or bad right now. They are very agnostic, as we see the fear and greed index at a 51. This is what is Redfin doing here? I have the deport button as well. I have a new button. I need the deport button. Aaron, I know you might have to search for it. If possible, find me the deport button. Now, I talk a lot of trash about certain crypto projects. Not even just a few projects. I mean, there's a lot of projects I got gripes with. But there's one project that is an altcoin that has a fondness in my heart, and that is Chainlink. Okay. And I'm seeing some good things happening on the Chainlink exchange reserve side. Chainlink supply on exchanges has dropped to a multi-year low as institutions begin to adopt the network per crypto quant. But also looks like something coming here. Chris Barrett, that's with Chainlink, talking about something booting up. Chainlink team hints that the network is booting up and are gearing up for the largest announcement in leak history. Now, there's something that comes to mind, an expectation and a plan for Chainlink to go live with Swift in transactions using the cross-chain interoperability protocol, or otherwise known as the CCIP, developed by Chainlink. And this is a communication and data oracle network that transfers data to and from. It is one of the more based and real utility projects on the planet, for me, in my humble opinion, of course. I bought Link a long time ago, but I added to it about $13. I got an old bag of it, and I actually kind of feel like I'm going to hold some of my Chainlink. When you see GDMS Maximus return and I start dumping all my, my memes, my altcoins, all that stuff, Chainlink, a chunk of it will remain. I'm going to keep a moon bag on. I like this question. Dakash, you're going to get me going on cars. So which car you got? Where'd your message go? Which car you got, bro? I have a minivan. I am a dad of 4 kids, and I have the Sienna. Okay. And now the Sienna, extreme levels of comfort, extreme levels of reliability, a massive screen, a TV in the back. I was really, really close to getting one of the newer Corvettes. Okay. Those new Corvettes look absolutely sick. But I went to a car show and then I sat inside of the Corvette and I do not fit. So I can't have nice things, right? And I come out of my house this morning and my second oldest daughter picks up a stick, bam, hits the car. I don't think I should get a fancy car until they're, of age where they understand fear a little bit better, because yeah, she's just going to beat it up. And I would be heartbroken if she hit a brand new Corvette with a stick. Obviously, like, there's not much you could do. But that would be pretty rough, right? That would be pretty rough. And also, I got to pull up the basement chat here as well. If you guys don't know, I have 6 monitors, about 10 chats in front of me. I got, oh my gosh, what is up? All the people on the blockchain basement. Thank you guys for joining this massive, massive multi-stream. We're at 7,800 watching right now. You guys are dead center of my heart. Okay. Dead center of my heart. Someone's doubting that I'm not that tall. I don't fit in it. My knees hit the damn dashboard. It's not happening. Okay. It's not happening. Now, another RWA project that's very, very interesting to me, Centrifuge. They're doing DERWAs coming to Stellar. So they're looking to actually start partnering up with Stellar. A lot of people ask me, like, how bullish are you on XRP? Blah, 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 blah. And it's if you must find something in the ISO narrative, right? The ISO conspiracy theory realm, I feel like Stellar has better upside than XRP. I think that they're essentially going for the same thing, and they have pretty similar original founding members, Jeb McCaleb. So I feel like Stellar's actually got pretty similar longevity outlook as XRP, but better upside because the market cap is so much lower, but it's definitely finding its stride within the RWA sector. Look at this. I mean, it's number 6 in terms of RWAs. It's definitely a nice chain that's very sneakily moving up in the ranks in terms of RWA involvement here. Now we do got to check back in, make sure nothing crazy's happened on the Federal Reserve site here. 2:30 still planned. Let's see. And Nicole Marie, and there's an argument, and I want to know in the chat here. Let's put a poll. What is a better project? What is a better project? XRP or XLM? XRP or XLM? All right. So which is better? That's what I'm going to put. And the chat is going to decide. Okay. Chat is going to decide. I'll put this in both YouTube channels. God, I got a lot of stuff going on, right? I got a lot of stuff going on. Let's see here. Let's put a poll. Because there's a lot of ISO maxis. There's a lot of ISO maxis out there. And I just kind of want to do a litmus test on which project is okay. Might it piss XR people off because you're bringing up another option other than XRP? But you know what? XLM has been in the mix for quite some time. It's a very fast protocol. And in the last bull market, I was even using Stellar to get in and out of projects for a very, very cheap transactional cost. Holy God, my Morpho trade is going ballistic. Hold up. Wait a minute. Oh, What you doing? What you doing, Morpho? All right, hold on. Wait a minute. Something is going right. All right, so we are pumping. Do I clip it? Do I jeet it? Not bad. I mean, not bad. I was a tiny little trading bag here. Oh, yes. Oh, yes. And that's why no one will ever remember your name. Staying out of the trenches, right? Absolutely sick. Ave trade pumping. Oh, baby, we are moving. We are moving. What's all these deleted messages? World Liberty 5, World Liberty 5. Don't spam the chat, Kevin, but I'll look at it. Here's my deal with World Liberty 5. It's a test ground for government level DeFi involvement. Bullish for DeFi? Yes. Long-term outlook? Yes. Probably going to turn into something really, really big over the long-term time frame? Yes. Does it have sexy pumpamentals currently? No. No. Okay. So there is some value in looking at a project that has a long-term vision, but expecting pumps like 50% moves in a day in comparison to like meme coin type price action, kind of out of the scope of what I'm looking for out of World Liberty 5, but I do look at it as a test ground for a government level involvement of DeFi, which I think is very, very bullish. Starting to move up $7,500 in 12 minutes. Ooh, what's up? Federal Reserve can print money. We can print money too. Am I right? Am I right? They can do it. Why can't we? Right? That's the top. That's the stuff. Is Crow pumping too? Woo! Thanks for the marinade tip. Everything is up now. Dang, what are we looking at on Bitcoin? First and foremost, and look at all the markets are going, ballistic at altcoins, and Bitcoin's like, yeah, I'm not dead. Yeah, I'm not dead. Look at this. Absolutely crazy. And it's still going. It looks like that support zone actually ended up playing out pretty nicely. I've stopped trading Bitcoin though. I've felt more juice to the upside with the altcoins and particularly Morpho, right? And actually, let's head on over to CoinMarketCap. Let's check it out. Boom. All right. So what do we got for the biggest winners? Bitcoin's still down on the 24-hour time frames. Just keep that in mind. MYX. Oh my God. I said this is going to pump yesterday. Look at the chart. Look at the chart. I want to puke right now. Oh my God. Oh my God. It is going nuts. It is going absolutely nuts. Now, it's probably going to run into a little bit of turbulence in these previous all-time high zones. I'm expecting that, but gosh, what was that gain? We're literally looking at it here, being like, yeah, it's probably going to pump you guys. Literally right here. Up by 62%. What? This is the chaos realm. This is animal spirits returning to the market. Arrow, let's see here. And you know what? I might have to clip this Morpho trade. It has gone up substantially for me. I'm going to clip. I like 40%. Fine. Should I clip it or not? Okay. Should I clip it or not? We got 40% gains on the Morpho trade. I'll leave you guys in control. All right. Clip the trade or not. Let's put the Q&A, or not the Q&A, the poll. Let's start a poll. Oh, wait, I got to end this. Oh, yeah, we got another poll to go over the results of. So 74% of viewers on Discover Crypto think that XRP is a better project than XLM, Stellar, Lumens. Let's go on over here and see where did my other chat go? Hold on, let me grab this out of the way. I got so many chats, guys. All right, let's see. All right, so we got XLM by 63% in the blockchain basement. That's very, very interesting. That's very, very interesting. So 62% of people think that XLM is better in the basement, and then 74% of people think XRP is better in Discover Crypto. A little bit of a contention point there, y'all. Y'all gonna have to fight it out, see who's got better upside after this altcoin season is all set and done, right? You're gonna have to measure up them sticks and see who made a bigger bang for their buck. Now, talk about some base plays here. Base team confirms that Arrow holders get native token allocation. September 29th, base batches signal announcements timing. Buy Arrow under $2.50 before the allocation snapshot locks. according to AIXBT. Let's go check out Aerodrome. I heard that there was some juice on the charts. Honestly, there's juice all over the charts. It's crazy. It's a freak off. Let's see here. $1.28, up by what, 6%. 7-day. All right. 11%. It's really not broken out. Like, I'm going to be looking for that breakout about $1.33. All right. $1.33 is where we can start talking about like that breakout moment. You know, it is what it is. I bought Arrow 18 cents. I bought it 3 times again at 50 cents. The bag is what it is. We're doing a lot of work in the background with Aerodrome. And if they do that base token release, things are going to get absolutely crazy. Absolutely crazy. Are we falling now? Let's see. Oh my God, it's over. Oh no. Help me, I fall. Help me, I fall. Oh, we got some news about AVNT too. Well, we got time before the FOMC data comes out. So let's hop on over to that. Now, perpetual futures were released on Coinbase for Avantis, right? AVNT. Now, Avantis is a sneaky little girl. Sneaky little girl. This is something that is backed by Pantera Capital, which is not a small firm, and also backed directly by Base. And this is something that I see being rolled out by Base as a hyper-liquid competitor. Right? So I think Base kind of fostering the development of Avantis makes it have a lot of pumpamentals. There. We may as well go check out the price because I'm giving myself FOMO about Avantis right now. Okay. Avantis. Oh wait, AVNT. What am I doing? Unbelievable. 4% on the day at $1 flat. Okay. That's actually not a bad pullback. I remember I was looking for something around this shelf. It did. It's 80 cents is what it did hit. I should have been paying better attention. This little red highlighted zone on the daily, just about what I'm looking for. Entries for me personally, because I'm not a financial advisor and I'm a public crypto maximalist that gets to come out live to 10,000 people live on the show right now and tell you what I'm doing with the most volatile asset on the planet. $1 flat. I'm looking for entry points around 85 cents. Okay. Looking for entry points around 85 cents. Let's refresh this chat. Man, this is that fast moving chat I got going on right now. A little bit of intense. Let's have a drink. Are we? Not that kind. Get the hair flowing a little bit, right? And now maybe we do the poll of do I clip this trade or not, right? Do I clip the trade? Clip the trade before FOMC. That's the question. Given the power to the people. Of course they're manipulating us, man. Of course, Brian. There's a government. Their job is to manipulate us, to psyop us into submission, right? Start poll. All right, I'll give you guys like 3 minutes to answer that. Let's see. Yeah, I love this too. People say that it has not pumped, but everything is at least 250% up in the last 6 months. 100%, bro. Well, 250. Maybe you chose the wrong coin if your coin hasn't pumped yet. Maybe you were following the wrong people. Everything that I've been leaning into, publicly disclosing that I'm buying, is up immensely. The one that's underperforming in my portfolio is Ondo. Okay? Ondo. And I almost feel like buying my barbecue food with Ondo tokens today. Am I going to go poor if I spend crypto I bought for half the price or a third of the price and I sell it right now and I only made 200% gains? Go buy myself some delicious barbecue, right? Am I going to be poor from that? I want to know. This whole like idea that people have to marry the altcoin that they're invested into is just absolutely insane to me. I think my Discord's probably pretty happy about that Morpho. Oh, now they got some short targets. Unbelievable, Elise. I'm going to fight you, Elise. Unbelievable. They're having a lot of fun in there. If you're not in the Discord and you want to learn how to trade, guys, I mean, you're doing yourself a disservice. Let's do some live sleuthing as well to see. We're 10 minutes away from the data coming out on base points. So Fed rates, right? Let's type this in. And I think it's been about, what has it been? Has it been 3 minutes? DAG, my worst coin, Nova SS. You know what? I totally forgot that I hold DAG. I haven't covered DAG in a long time. I'm going to go look at that chart too. Let's check out what we got here on the, all right. So we got a 63% vote for yes, clip the trade right now on the blockchain basement. Now let's go check out Discover Crypto. 70% yes. All right, guys. There it goes. There it goes. It's dead. It's dead. I killed it. I only made 36% in an hour. I'm going to go poor now. And it's all your fault. All it's all your fault. Man, what a beautiful day trading. You know what? This has been an incredible week. Last few weeks trading here. All right, I ended the poll. I closed it. The power to the people, right? Manipulation happening. Now, it's not just enough that I made 36% in an hour, but it also must dump immediately after I sell the long, right? That is the average logic here. It's probably, it's probably going to make me regret selling. Whatever. It is what it is. I'm here for you. I'm here for the content, folks. Ondo goes to $26. That's a hell of a pump. Ondo's got to accomplish some major stuff going. I like this. A gung. And I'm probably slaughtering your name. Please forgive me. I am but a simple man. Thinking that we go to $130,000. Woof, man, $130,000 on Bitcoin off this pump, man. That would be absolutely juicy. What about XRP? Hybrid. It's when I talked and compared about Solana or Stellar to XRP, it wasn't that I think that XRP has no pump left in it. I'm thinking like $5 or $6 is accomplishable. I gotta let the chat know. GTID, holy God, I got all kinds of GTID on live. GTID on live. Got to get the notification out to everyone. God. Oh. Woo-hoo-hoo-hoo. Oh, it makes me so happy seeing all of these reactions in our trading group. God. Oh, that makes me happy. Everyone says there is no bull market, there is no upside. Just leverage it. All right. Now, we don't have the data out yet for whether the Fed has cut rates or not. Let's see here. We got 7 minutes going, and we may as well check out Kita before. That's a great idea, actually. I like Kita. I like Kita as a project, but it lost a little bit of momentum after that Visa announcement. Where are we at? So we're about $1.92. A horrible graph, actually. Actually, this is opportunities. Higher lows, right on the doorstep of alt season. Higher lows on the doorstep of alt season. New project, juice. That's what I see on Kita. Okay. That's what I see on Kita. Are you going live, John? Am I live? Am I live right now? It says there's 9,000 people watching, and I'm questioning now if I'm live. Am I? Oh, to the Fed. Yeah. I have the live stream for the Fed pulled up. It's coming out at 2:30 though, right? So we're gonna watch the Bitcoin and market reaction here in about 6 minutes. We're getting that data come out in 6 minutes. This is gonna be crazy, you guys. I almost feel like I need some doom music going on, but I don't want to go back into jail, right? I don't want to go back into jail on YouTube, so I can't do that. But here's the Bitcoin chart. We're right at 115.9. Let's see here, and we'll actually make this bigger. Oh, snap. I got a legend from down under coming in, getting ready to come in the show here today. We also have, I want to show this. We got the liquidity sweep going on. And you just give me the wiggly face when you're ready to come up on the stage, my mystical co-host here. We got a fella coming in. Now, the liquidity sweep that I was watching earlier this morning definitely happened. It still looks like it wants a bid, but this is probably going to be chaos. This is probably going to be chaos. The Fed number coming out, we already know what it's going to be, but we're probably going to experience some painful up and down. That's what, usually these things are, very volatile days. I was able to find the trade earlier this morning, and, now here we are. And, it's probably going to make me wish I was still in the trade, but it is what it is. Like trading will give you ultimate FOMO either way. Either way things are going, it's going to give you ultimate FOMO. You just got to remain based, you know. There she goes. There goes again. There she goes again. I'll never do that again until like 20 minutes from now. You know, this is kind of a chop zone. This is a turbulent zone. ETH Classic, ETC, normies are going to buy it. They're going to be like, oh, it's like Coke Classic, but it's Ethereum Classic. It's going to pump. ETH Classic is absolutely nuts. ETH Classic is absolutely nuts, and it's a true ass altcoin, right? So, you know, I almost feel like ETH Classic feels like Cardano to me, and maybe I'm going to get booed off the stage, but I can't hear you, Boos, so it doesn't matter. It feels like the true ass altcoin that Cardano is, right? Massive pump coming now, longing ETH. Oh my God, you guys are being wild out there, hopping into trades right before this. Danger, absolute danger. Let's go back to Bitcoin's chart and see what we got here. You know, we'll keep an eye on this. We're right smack dab in the middle of this chop bid zone. Cardano, I think, will be a long-term winner. Cardano, I think, will be a long-term winner. Could this start alt season? We've been in altcoin season, baby. But how long the alt season lasts, right? But how long the alt season lasts. Pump over Cardano. There's a lot of conversation, a lot of battles back and forth. Which project is better? Now, if you have a concise thesis on why a project is good and nothing has fundamentally changed in that original thesis of why that project is good, why sell, right? If nothing has fundamentally changed on your thoughts on why whatever project it is that you're thinking about is good, why change your investment strategy? I'm asking you a question, right? Not telling you what to do, just think internally, right? Use critical thinking logic to make those decisions for ourselves. Now, we will the YouTube for the Federal Reserve also just started up their little show here. It's not live yet, but they got the room created, so we're going to keep this up. Oh, look, they disabled the chat because they don't want to hear about the gripes of everyone yelling that they completely lied to us for the last few years, and now we're heading into a market freeze and stagflationary event. Now, I can talk about those stagflationary events after we get that actual data come out. Again, it's looking like 25 base points. Open Door Army, please will you put the charts up when it goes live? Absolutely. Absolutely, I will. Oh, what the hell's Open Door? It sounds like Next Door. I was falling asleep last night and I heard this huge crash. And my Cane Corso started going absolutely ballistic in the room next to me. So naturally, I cleared the home with the flashlight, the standard. You know, if you don't know, you grab the real estate on the handle of it and you hold your light like that. If you don't have, you know, a mounted light, it ended up being a gigantic lantern that fell down that my dog was trying to attack. I was looking on Next Door Neighbor, trying to find out if anyone had heard any craziness there. Last night, that was actually kind of a crazy moment here. Can you check on Crow? Why not, brother? Why not here? Josh, you give me the signal as well when you're ready to go up. I'll pull you up whenever you're ready, brother. ETH is pumping. ETH is pumping off of that $4,500 mark at least. So that's good. Go check it on Crow. I want to keep. So let's go. Bam. Let's go to Crow token because it had a lot of juice from that Trump announcement. And then a pullback. Kelly was doing some excellent TA work on it earlier this morning. Crow, let's see here. On the 15-minute, a decent move, but I'm imagining that most alts look like this. I mean, that was not a massive, like 1.4%. Maybe on 50x leverage, that's a huge pump. Maybe on 50x leverage and Batusi, okay? Batusi. In the chat, I see you, and
you are banned.
Okay, there you go. Now let's look at Crow now. Look what that ban did. All those gains gone. ETH dumped. Am I happy I sold my long? Sort of. Okay, I would have lost a little bit of money. Made some good money on that. Honestly, that was pretty cool. Now SPX pumping. SPX is pumping on the hourly. 25 base points. It's the number is in. 25 base points is the move here. 25 base point cut is now looking like it is confirmed. Let's go verify this all on the Twitter. Let's see here. BPS. Let's see here. 0.25. Yep. We got the chat coming in. ETH going crazy. Oh my God. Here's the Darth Maul. Holy God. The chaos. The chaos has become 15-minute Darth Maul candle washing out. Absolutely crazy. I'm going to set up my my screen here so I can actually overlay the live stream with the charts. So give me just a quick second. I'm going to make things bigger. That's what she said. Let's see here. Share screen. Bam. In your thing. Bam. All right. Got this. Add to stage. And then I can add on. You know what? This is what I could do. So, oh God. Where's the Fed thing? All right. Here we go. There's that. And then I'll also make this a separate tab. And I will make this smaller so we can keep a close eye on ETH price here. Bam, 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 bam. Bam, bam, bam. Okay. All right. So nothing too crazy. I mean, this is a Bitcoin price, right? Just writhing within this buy and sell box, which is absolutely nuts to see. Sonic airdrop, worst ever. It's the way it goes. Sonic airdrop, worst ever. Pour some liquor out, baby. Pour some liquor out. Now, oh, and where's this? Hold on. Where is it? Oh, I can't find the sad music. I was looking for a tiny violin. I wanted to play a tiny violin. All right. Let's see. Oh, you're good to go. Perfect. All right. We got add to stage.
Test.
Bam.
There we go.
What's up, man?
A little bit. I'm brighter than the future right now, so we're turning down the lighting just a little bit. But there we go. What is up, guys? Yeah, dude, man. FOMC, perfect time to go live. Perfect time. The trades on XRP are doing fantastic here. We're in the same trade.
Oh, you are?
We are doing good. We're about $1,800 right now, but the volatility is insane. So I'm thinking about closing this thing, dude.
And shout out, we got 11,000 people watching the show right now. 3,500 on YouTube. I mean, we are all over the place. I am totally banning. What's this, guys?
I love your banned.
Yeah, we got. Well, I need the deport button too. Hold on. I'm gonna hide this user from the channel forever. If you come in here shilling something 100 times, I know to literally do away with you forever. Kind of like the deport button does. Algo looking nice. We got a lot of charts that are looking nice. Honestly, let's go pull up a lot of these things. God, I'm probably gonna hate myself for closing that more for long though.
Yeah. Yeah, I mean, dude, it was hard. Like, because I entered the XRP trade here with the chat, with the Discord and the groups probably 2 days ago now, and we got in at $2.99. So we have a really good break-even position. Almost came back down to it takes. My stop loss is at break-even, but dude, then I don't know. We just saw the pinch taking place. We left it open. It's now up roughly $1,900. But dude, check this. Let me share the screen here.
Yeah,
I don't know if anybody's seen this.
I'll pull it down.
Look at this minute time frame, Drew.
Oh my God, bro. Oh
that
my
is
God.
XRP on the 1 minute time frame. So we saw it go up to 306.7 and then back down, but to 301 in one. I mean, that's a massive move here off the announcement. But when you're looking at the liquidations here, guys, it looks very bullish today. I think, with everybody coming in here, we have liquidations all the way up to $117,000. The 117 level has been huge resistance. But if I think we break through this, I mean, we might get a nice sweep like we were predicting up to about 118 before we see a pullback potentially.
Yeah, I mean, people are asking me like, say up or down, Drew, up or down. I'm like, up, 118K. Feels like we can do it today. Yeah. We'll see if we get there. I did clip my trade already, but it was kind of a fresh one. I'm just a scalp trader, in and out. I get in and out, absolutely chaos zone. Josh, good to see you though. Did you lose a tan? Why am I so much tanner
I
than
have
you?
no
Weren't
glasses
you just in
today.
Bali?
I realized I didn't have glasses on until I got to the studio. So yeah, but I'm also just white as shit. So there's also that. I went to Bali for like 3 weeks and I went from white to eggshell white.
Okay.
Not even like a
Okay.
fresh egg out of a real chicken coop, like just, straight up bleached egg white.
Yeah. My wife tried to get me to
Josh looks
leave
like
the chickens
President Louis.
behind on the next house. It ain't happening. I'm not leaving the chickens behind.
I'm so,
No
guys,
chicken
the
left
more I
behind.
turn into a Bitcoin maxi, the more I turn into President Bukele. That's what's happening here.
Okay. I can see that. Absolutely. Well, as you can see, the charts, I mean, this is the 15-minute time frame for Bitcoin and very, very volatile. I'm going to zoom this in because when on fence, zoom in, right? That's what the saying goes. Oh, let's do. There we go. Ooh, baby. We are getting some juice on Bitcoin. Love to see it. We don't have, I mean, what's going on in the background is basically just their little commercial thing. They're back to the waiting period here. Nothing insanely exciting. Josh, I've seen some things, like I'm starting to feel a little bit of FOMO about this AVNT ticker, this hyperliquid competitor.
Avantis, baby.
It's down to $1. But hold on, you broke my character. Josh looking like Dracula.
Yes, sir, dude. No, I didn't have time to do the full hair today, so I just slicked it back today, dude. We want the slick back look today. No glasses, dude. I feel like biting down on some cheeks. You know what I'm saying today? That's how I feel, man.
Shout out to that.
Which, guys, chat, can you hear me? Because I did go live on TikTok as well, and there's like literally there's 10,000 people watching. Guys, everybody start double tapping, hit that like button, repost if you're on X. We're now like 25 minutes away from Jerome Powell coming out and speaking. We're open in a position on XRP here, up literally almost $2,000.
Let me check out your position.
So shout out to everybody that followed. But yes, guys, I'm Dracula, and with me today, I got Doomsday Drew here with me. So we got a perfect mix. We got the person that's prepped for the end of the world, and I am the person from the underworld. They cut 25 basis points. Yeah, it kind of came out as expected, guys. So what people are going to be waiting on now is really what happens at 2:30 this afternoon, which is now only 23 minutes away. Let me know in the comments right now. What do you think? What color tie is Jerome Powell going to wear today? Because that is how markets tend to bet on the price action.
Always wears purple. I don't understand where this betting on what he literally, it's like he only has one tie and it's all purple. Like I'm betting purple.
Maybe today's
betting purple.
Maybe green, orange, dude. Orange would be wild.
Ooh, the charts are getting spicy here, Josh. Charts are getting spicy here.
Yeah, I don't like them. I think I should just close this trade.
You're gonna cheat it?
I don't know, man. I mean, it's just an easy, good, open trade. And I
just stop loss above the entry point.
What's that?
Is your stop loss safe and above the entry point, or are you leaving it?
Yeah, it's at about break even.
Okay.
It's at a good position. So like what I'm looking at though is, I mean, dude, I'm looking at the liquidations here. Let's go to the daily time frame. The daily time frame, again, bullish. So like Bitcoin, there's liquidity down to 114.5, but like there's so much starting to open up towards 118. And what you guys got to remember here is on the screen, it says it 100x, 50x, 25x. The bright orange is the more, like, you want to pay attention to the bright orange more than anything. And you have liquidity not only open up all the way to 128 or 121, but look at this, Drew, 127.6. There is 10x positions on. So there's liquidity up here. So if we get a short squeeze, it's very, very possible. I wouldn't be shocked if we push to 118K today. It just, you got to be prepared for the volatility. So if you're not in a good position that you caught from a few days ago, just know that this is going to be incredibly volatile. Bitcoin looking wishy-washy here. Let's look at XRP again, 105. I mean, look at that is disgusting. That is this. How much is this, by the way? This is a 1.85% candlestick. So if you're on high leverage,
right,
good luck. Good luck.
Yeah,
we're on a 5x low leverage long from 3 days ago.
That's why I got out of the way with my Morpho long, is because it's 19x. And so, and it's like a way smaller market cap, bro. So it's just, it is,
that's
what
pretty
it is.
degenerate. Yeah, that's moving by 2-3% candle wicks on at any given moment.
But it's an easy, I made like 40% in like an hour. You know what I mean? It's like, I got a position ahead of time.
Bro.
Huh?
Lock it away. That was beautiful then.
Oh yeah. I mean, absolutely. And if I'm making 30% trades daily, that compounds very, very quickly. You know what I mean? Very, very cool though. I'm loving seeing the volatility. It makes for good excitement on the charts. I am monitoring and waiting for Jerome Powell to go live on the Federal Reserve website here as well. And we might actually want to watch it on this one. Let's see here. Pull this bad boy up. And then
that will be definitely the one you want to watch.
yeah.
Where are we going? Wait, okay, let me ask this, chat, because let's get a price prediction here, guys. What do you think Bitcoin's price is? It going to be up or down? Let us know, up or down after the FOMC meeting today. I want to know where chat's at, up or down after the FOMC, because chat is asking right now, Drew, and I have to ask your opinion on this. Do you think we're going to be higher or lower after the FOMC meeting today? Because that's what everybody is curious about.
I'm leaning bullish. It's really, I'll have to expand this a little bit, but the weekly time frames have got me feeling all giddy inside. We printed a green dot on the upper echelon of momentum, and we are starting to see some really, really good indicators telling us up. And shout out Crypto Face and Market Cipher. Ooh, I got a little eyelash trying to make its way into my face. So this is what I'm looking at on Bitcoin is we printed a green dot on the weekly. These weekly green dots they usually end up being very, very powerful for price action. We see momentum swooping back to the upside. I also see that the VWAP has reset from the lows that it hit. And I really like when the VWAP hits a -13 on the weekly and then reverses, kept momentum to the upside. And we are in pump city from a larger time frame standpoint. So beyond all the 1 minute charts and all the things that we're doing on the leverage trading side, I am hard-sidedly of the opinion we are going higher from here. Yes, there's extreme chop right now, but that weekly signal to me tells me quite a bit about where the general markets are moving, where the money is flowing, how good the velocity of upswing we are actually looking at outside of all the the bullish people, the bearish people. I mean, everyone's going to have opinions. They're just like butthole, right? Everyone's got one. But I have data backing this up. And so, it is what it is. I'm not quite. Should we talk about stagflation? I feel like stagflation bores people, but basically, we're in a scenario right now that I feel like is worth talking about. Josh, can you go on ahead and pull up the gold chart on a weekly time frame and then zoom out so we can get a viewpoint all the way back to 1970? Because I got a story to tell here.
Sorry, what chart?
The gold chart.
Gold.
Commodity that is a hedge against monetary irresponsibility. The same irresponsibilities that we're seeing in our current day and age right now as the Federal Reserve is cutting interest rates into an inflationary environment. This is what I want to compare to our current time frame here. I'll pull you up. Now, this chart is very, very, very important for me and my investment strategy. What we see, Bitcoin going to a parabolic hockey stick all-time high, or gold rather, 3650, right? A massive, massive move gold's made. This is not a normal move. This is not a sound and resilient fiat currency system that we're looking at here reflected on this gold price. But you see it all the way back in 1970. Back and look at that hockey stick pattern that happened back in 1970, about 1976, right there, that swoop up right there. This current scenario has all of the same macroeconomic implications of inflation returning, cooling labor market, people without money in savings account that ended up causing a lock on the housing market and a general stagflation where you don't have growth, but inflation returns with a vengeance. This looks very, very similar to me. This looks very, very similar to me. I don't feel like buying gold at all in this scenario. But what I will say is that if this process repeats itself, instead of the 16% mortgages that we experienced in the 70s to 80s with the what they call great inflation event, we're going to be looking at 12 to 14% interest rates on the average home costing $450,000. This is a nail in the coffin for anyone that's trying in retail sense to own a home in America. Right. And so after the event, that first box that you highlighted there, the market on gold and the commodity went flat because they injected tons of liquidity. They brought interest rates down. They really tampered the market down. And I just want to warn about this because, yeah, what's being done over the course of the next few months here is bullish for our alt bags, bullish for risk assets, bullish for gold, but there will be a reckoning. And I think in my heart of hearts that the 4-year cycle is still absolutely at play. I feel like that is still absolutely at play. Check this out. Bitcoin
dumping right now. Yeah, I was about to say.
Let's see. We're drunk, and I'm glad I clipped that trade. Jeez, good googly moogly. Let's see.
We're getting
here.
that FOMC volatility, if you ask me.
Oh yeah, I mean, obviously it's going to be there.
Looks like we just got a huge liquidation sweep.
Huge liquidation sweeps. Let's go to the 4-hour and look at this a little bit wider time frame. I think a crescendo, I mean, a major support spot at 100. Is there any liquidity spots at 114.5?
Yeah, we came out and we actually came right down to it. That was the liquidation level. So
really?
Now the liquidation level is 116.9.
Okay.
Still a little bit more, but it's a 114.599. And the liquidation sweep was to 114.99. So it's kind of like, actually, I'll move this up a little bit. It's about here. But again, people need to remember that a liquidation level doesn't necessarily mean it has to be wiped. It could be a support zone. So it's going to be a really hard spring for Bitcoin to eat through this position. So like what you're going to kind of see is this. And then if it like snaps, it bounces. If it doesn't, it breaks through. So like this could just be a signal that we got the liquidation sweep the market makers want. Again, this is why you don't trade liquidation day or FOMC days usually, guys. Because of the volatility within, like, look at this liquidation sweep. This is retail just getting wrecked. It's up, down, up, down, up, down. So, you wouldn't be shocked. I would not be shocked if you ended up today seeing this, a sweep of the liquidation level to the highs before it goes lower, right? If we see a liquidation sweep to the upside, that's going to be kind of confluence that you're going to be choppy to the downside. But now if you get it going into it, like we did just right now, this could have been a liquidation sweep that signals the upside push. But again, I think, guys, just don't trade FOMC day. That's always the rule. It's always choppy.
I literally just traded FOMC. What are you talking about?
Well, I've been in a low leverage trade for days, right? Maybe we trade. If you're a professional trader, you can have fun with it. But I think we both know, Drew, that it's very volatile.
It is. I just had to, I had to call a spade, right? I'm in there, but I did get out of the way right before this chaos. God, the stream keeps growing. I got 12,800 watching live right now. Absolute chaos here. Now let's pull up and check in. We are still waiting on the Federal Reserve. This is their website in the background. This is the price action right here overlaid on Bitcoin. And God. Might be a good time to spot buy some stuff. That actually is coming to my mind. It's like maybe I could get an entry point on Avantis. Where's Avantis? Can you check Avantis right now? Because I'm having FOMO about Avantis. Yeah.
So a lot of people are so Avantis. The reason why I haven't jumped into it yet is I called Avantis in the Discord at 33 cents. At 33 cents, I said I'm going to wait for a 10% pullback. It went to 42 cents. I said I'm going to wait for a 15% pullback. It went to 80 cents. I said I'm going to wait for a 30% pullback. The problem was it never pulled back, Drew. So Avantis here, the reason why it's ripping was off the base announcement. There's a lot of people speculating that a lot of the base ecosystem plays are going to be getting airdrops for a potential base airdrop now in the future. And that kind of led to the huge spike up here. But either way, it was already a really, really strong platform. Right? Look at this. Global markets, limitless leverage. It's backed by base. $22 billion in traded volume already. Over 2.3 million trades. This is the largest real world asset exchange on Base's ecosystem. So very clean project, very, very simple, very, 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 very backed by a lot of really large institutions. It kind of had everything just playing out. I mean, you saw the total market cap was, I think, 60 or 70 million when we first saw it. And the volume, 500 million. So this is a very key indicator, guys, of like a project that has a lot of attention that, when it has a backer, when it has all of the moving like mechanics that you would see in what could be a good perpetual based contract play. When you see that type of volume, it means there's a ton of interest. So What
Yeah.
I am seeing here, volume's down now 50%, right? So the attention, volume is attention, chat. So if volume is slowing down, it usually means you're moving towards a consolidation period. And so now at the dollar range, after peaking at $1.40, I think it could be a good pickup. But to be honest with you, Drew, like it has ran up 300% in the last few days.
Yeah.
I'm waiting for just an entry point because I don't like jumping into something, even though I know it's a good project. This thing could definitely go to 500, 600, $700 million. But like, I'm like, dude, I've just seen it rip without me. So I'm kind of like, okay, I'm going to find another play that hasn't necessarily taken off yet and kind of just wait and be patient until it consolidates for a decent period of time.
Yeah. And it's like navigating and not buying tops, not buying gigantic wicks is how I've ended up with low entry points. Like outside of Bitcoin, my favorite alt is Chainlink, but like I don't buy it very often. So my average entry is like $3.90 or something. You know what I mean? Like I don't buy it very often. And I definitely trade a lot and then use that money. I don't care if I'm top blasting Bitcoin. I trade, I earn the tether, I send it into Bitcoin. And a little bit of Morpho previously. So shout out to Moxie out in the blockchain basement. He trades because I trade. Shout out to you, baby. God, what is this asterisk? I think I know Nicholas, so I'm going to leave him be. Let's go back over to my charts, or the charts and the FOMC here. We're waiting. We're waiting patiently here.
I was going to say real quick too, before we continue, guys, there's now over 13,000 people watching across all of our social channels. Make sure you guys just hit that like button, repost. We're now we're 8 minutes away. Wow, time's flying by. We're 8 minutes away from Jerome Powell coming out and speaking for the FOMC. So if you guys are on Twitter, hit that like, hit that repost. If you're on YouTube, hit that like button, turn it sideways, hit the little like icon, leave a comment. If you're on TikTok, double tap the screen, get your fingers going. Warm up those streams, guys. Warm up those streams because this is a big day. Of course, we're very excited because this is the first time the Fed has cut interest rates in a very long time. And what people are kind of expecting right now is there is a possibility to an upside play here where people believe traditional markets are waiting for Jerome Powell and the speech in terms of understanding where their decisions are moving forward, whether it's 100 basis point rate cuts this year or 100 by his retirement in 2025 or 2026. That is what we're going to be looking out for. So lots of volatility expected today. Any trader out there that's telling you there's a guarantee, traction to the upside or downside after an FOMC, just know, I know Drew will back me on this. They probably haven't been through an FOMC meeting before. We've been doing this for 4 years. We watch every single FOMC meeting, and I'll tell you, it is always a gambit, if that makes sense.
It's insane.
It's not gambit. There's another word. You just can't say it on other socials.
Stop losses have, I reiterated it this morning. Stop losses are my friend, especially today. Don't want to blow up my bag thanks to Jerome Powell coming up and dancing on the stage here.
I hope he blows it up for us. I hope he pumps it for us. I really hope he comes out and puts that money printer on and screams buy. I hope he says the word Bitcoin.
So we have 7 minutes until this goes live. Okay. So I actually want to touch on something here. Let's go over to what
do you want to touch,
inflation.
Lindsay? Or Drew, what do you want to touch? My bad.
Not you. Okay. No homo. The great inflation of 1970 to 80. So that gold chart that I had you look at, Josh, the commodity of gold went parabolic in that time frame because inflation went to just around 15% year over year in the 1970s to 80s. This caused the markets to lock up, right? Thus, the hedge against fiscal irresponsibility in a locked market was gold, and it went parabolic. This is what they call the great inflation. Now, the reason why I've been watching this chart in comparison to our current time frame is because about a year and a half, maybe 2 years ago, I saw warning signs within the car market, within the housing market, that buyers were really out of money. They weren't interested in buying, and the market was starting to lock up just a little bit. Now, the signal of that made me move to the understanding and just general understanding. Like after I saw them lie about the job reports over and over again, I realized they're hiding something very, very bad in the U.S. economy. Many people agree with me or disagree with me, vice versa. But I believe that in the middle of next year, to the end of next year, the markets are going to have to acknowledge that, yes, We are locked. Lowering the interest rates didn't do a damn thing. Inflation returns to 10+%. And then the hammer comes down from the Federal Reserve to fix an out of control inflationary spike to the upside. Now, take this information as you will, but what I'm doing is I'm going to act like Warren Buffett. At the end of 2026, I'm going to use cash, aka Tether. I'm going to buy homes, Bitcoin, Second Amendment goods, things of that nature, because they retain value. And that huge valley that you saw after gold, it in essence is a collapse in a system that is reliant on constant upside. It is not that the S&P 500 or Wall Street collapsed down to zero like we saw in the 1930s Great Depressionary collapse. It is that a system reliant on constant growth that flatlines, that is in essence a collapse. And I remember you mentioned that I'm a doomsday prepper. Over the course of the last few years, I've realized that this is not a collapse down. This is a collapse up. This is a collapse up in terms of cost of housing. This is a collapse up in terms of cost of food. This is a collapse up that will put the average person that doesn't have hard-sided goods, cash flowing businesses into the poorhouse. You know what BlackRock's subsidiary Blackstone's actually doing right now, along with Printier Partners, one of the largest home buyers in the United States? They're leaning into Section 8 housing. They're leaning into Domino's Pizza. They're leaning into your life being so difficult that all you can afford is government-assisted housing and fast food delivered to your door from Domino's Pizza. That's where Warren Buffett thinks this market is. Let's check out this super chat. Billions of dollars have been getting laundered. They're absolutely hiding something ugly in the U.S. economy. I absolutely agree with that. Honestly, they lost $1.4 trillion of our tax.
Yeah, I'd say it's
money.
trillions of dollars that have been laundered.
Yeah.
I think there's trillions that have been unaccounted for, which is like even scarier. It's why like I think we have like one chance in the next 8 years before this becomes a technocracy, where like if we actually go after congressional spending and actually put a deficit limit and force Congress to budget. But it's a hard play because one, no one wants to get up and do it, right? People are just kind of laying down, committing Sudoku or whatever it's called in terms of the Japanese do. They're just like, you know what? It's bad. We're not going to fix it. I'm done. I surrender. But like, you know, there is a lot of positivity to the upside and that collapse to the upside. Whether some people believe it's, you know, going to be the great AI replacement or the great inflationary cycle, you know, I agree with you. I think there's, you know, I think you're also very pro-American as myself as well, where we're just like, we believe that the US dollar isn't like, I don't think the US dollar is going to be replaced by any other world currency. I think they're using crypto to extend fractional banking and the US superpower and control even further. And so there's so much that's happening here, but I want to ask chat here because we're about to be live in 2 minutes, guys, with the FOMC meeting, guys. Hit that like button, okay? Again, I'm going to ask everybody here, are you bullish or bearish on the FOMC meeting? Are you bullish or bearish on the, it's seppuku, thank you. Yeah, it's not Sudoku or whatever it's called. I think I said the game, right? Like the, I don't know if that's a board game, but
Lord.
I don't know. I just knew it was an S and ended in an U, and I was like,
oh my God.
But yeah, guys, are you bullish or bearish on the FOMC meeting? Because I know me and Drew, we're definitely optimistic on the cycle. I don't think either of us believe we're even near the top. We're definitely well into a bull run. But this is going to open up. I think you brought up a lot of great points, Drew. I think you brought up the, you know, this is definitely, I like that you're comparing this in the 1970s, because the other thing people don't realize is obviously there's the gold explaining the inflationary cycle, but it was the only other time, I believe, in the last 60 years where in a stagflationary economy, GDP grew. So that's like a moment where you have to realize, okay, and specifically in the 1970s is because of energy production, industrialization, et cetera. But you had this huge economic expansion, but it felt like you're losing more money than ever. And that's because of the devaluation of the dollar. So businesses, the 1%, they get richer. The 99%, they get poorer. Holding your dollars, you lose money.
People are saying Jerome is on stage. I'm looking for him. Not seeing him yet.
Jerome's on stage or getting scammed.
Not seeing him yet. This is the Federal Reserve press conference for today. I'm waiting for this to come out. Where is he? Oh, here we go. Here we go.
He's still not speaking, though.
All right, here we go.
Yo, appreciate you, John. He's live?
Here we go. Oh,
There
God. Purple tie.
Hit hide for me on the StreamYard.
Okay.
You have a little bar that popped up. It says, yeah. I don't hear the audio. There's no audio.
Chat, do you hear audio?
There's no audio. For sure, there's no audio.
No sound. All right, let's see here. I'm going to pause it. I'm going to fix it. Stop screen. Share screen. Entire screen. Bam. Bam. Bam.
Did he say good afternoon? We'll never know.
He did. He did. He did. All right, let's set it. All right.
Risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer
Hit hide for me again.
In contrast, business investment in equipment and intangibles has
Thank you,
picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great.
There we go.
Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry. Can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, and tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation. And actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point. And we do expect them to continue to build over the course of the rest of the year and into next year. And, you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply. And to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good. But in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Chat, we dumping?
Tim Russell.
Dumping or pumping, chat?
We done
Bullish
dumb.
or bearish?
Conditions and the balance of risks no longer warrant a restrictive policy setting.
So I don't think we can say that. But what we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things.
It was not.
I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith for the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, it's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television.
Down like the Titanic, chat.
A little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply. And we know that because the unemployment rate has ticked up. So that's what I meant by that.
Like a follow-up, every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put projections together. You're writing down a rate path, which is designed to create over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to.
Man, Jerome Powell sucks, dude.
You believe would return to the 2% goal over at least by the end of the exercise.
He's not a fun guy, man.
I have a hard job.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going
W
up
or L
in
chat?
categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass through of the tariffs into inflation has been slower and smaller. The labor market has softened, so the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, we're pumping really skewed toward inflation for a long time, really. Now we see that there's risk clearly in the labor market. And so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than.
So it's probable we're going to get
this
more.
one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question. Is the dispersion,
Drew,
the outlook,
Yeah.
A sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low, and when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk, and that means there's no risk-free path. And so it's quite a difficult situation for policymakers, and it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that, but it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right there that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
These answers are so long-winded.
There's nothing.
Yeah, how many times can you say unusual situation?
You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who is at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a great discussion around these challenging issues. So,
Excuse me.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month. And you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should
Finally,
be?
thank you.
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Okay, so he's got short answers when he's wrong.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. The black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates.
Shut the door for me.
Right? And markets has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all this together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut. But the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
Interesting comment.
As a follow-up,
guys, like the stream.
Growth mix right now
Keeps us awake.
Traded in an investment, and on the consumer spending side, in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Oh my God, it's such a lie.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve system and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to to always trying to do better.
He feels the
weird gotcha question. I don't know what type of gotcha question that was.
On whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things, but yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Oh my God! Ask this question one more time. I'm going to fucking drive to Washington D.C.
Broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing 0.3 or 0.4 or something like that to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it,
you mean the importer?
Make a product,
Jesus.
You're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
We're only down by like a 0.5%.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Who hires these people, TJ? Jesus Christ. This guy asked ChatGPT for questions for the Fed.
Karina Saraiva with Bloomberg News. I just
They get
wanted
assigned
to
their
follow
questions.
up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive. And the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is? And what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us.
Crush out.
And we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Holte's probably freaking out too, huh, TJ? That housing
Trump
director.
is. Yeah, they all are.
These are the dumbest questions on earth. They get stupider each meeting.
The range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you had about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
Who let the bread in? I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times.
There
But
you
from
go.
a policy
There you
standpoint,
go, Powell.
the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
That's not a good thing to say. What he just said is not good.
Thank you, Archie Hall.
Almost was.
Economist. You
Almost.
mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
Why is there more
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000. And you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in. And it's
I like this, Britt.
It's a good bit from consumption. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So. We watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
That's funny.
There's some serious chop
Hi,
here.
Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, for the big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
Bullish on the curbs.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Well, we got a penguin.
We have us professionals have no idea what the fuck we're doing. That's what he's saying.
Sean Berger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
That's a good question. That's a good question.
We're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition. We've said that we would stop somewhat above somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects.
That's a bold-faced lie.
Moving around inside a giant economy. The level of runoff is not very large. So I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that we somehow incorporate that in as something in a different way.
We just don't think about it. Yeah, good answer.
You don't
Chair
know.
Powell, Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially creating a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, I would say it's a mixed picture, but households are in good shape. Banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run, they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, I'm wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
They're going to remain independent.
As you said, shorter term inflation expectations have tended to respond to near term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer term inflation expectations both break even in the markets, and almost all of the longer term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But we're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals. And so we have to balance those two. When they're both at risk, we have to balance them. And that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
All right. He's done.
Finally, dude. What a pointless question to end it. Do you think the Fed will remain independent? What type of question? I don't know, man. These are just like, there's actually a few. I think the Brit had some of the best questions. Jennifer had some good questions. Obviously I want both you guys' takes. It's bullish, but uncertain. It's uncertain to the fact that the Federal Reserve is adjusting their decisions based off data points that the government previously gave them that weren't true in terms of a strong labor market condition. So now they've led them through the tariff conversations with the current administration, is now running into a stagflationary market. So I think it's as expected, 25 basis point rate cut. The probability and consensus is a 50 basis point rate cut by the end of the year. Depending on data points coming out in September and in November, that will lead us to the FOMC decision. Actually, I think the last one of the year is in November. I don't think there's one in December. Which would
there's two. There's two more.
Yeah, there's two more. October,
there's
December.
2 more. So then I think it's likely we see 75 basis points cut this year.
Yeah, I mean, he basically said when they showed that dot plot, they basically said 50 basis points is like the consensus. Like if you go back and look at that, that graphic, that's basically what he said is going to happen. But the key phrase that he said to me is, if I can remove and add, is this right here. We will continue to reduce the size of our balance sheet. That is by definition quantitative tightening. So as long as the Fed is reducing the size of their balance sheet, that is going to keep the restrictions on the market. It doesn't really matter what the rate cut is or what the interest rate is. Like if it's 3.75, 4, 3.5, even 3.25 or 3, as long as they're reducing their balance sheet, you're going to feel that. And so the real pump comes in. And I think what needs to happen, I said this a little bit earlier today, Trump needs the interest rate to come down so that they can refinance. Once they refinance, then the Treasury can go back to easing, buying stuff, increasing its balance sheet. They would hope that the Fed would increase their balance sheet. And that to me was the most hawkish thing he said, is we're still reducing the size of our balance sheet. Now, towards the end, when they pressed him on that, like when somebody said, well, why? If you're saying this needs to happen, why are you reducing the size of your balance sheet? He kind of backtracked and said, oh, it's marginal. It's a small amount in the grand scheme of a giant economy, blah, 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 blah. But that is the true pivot that we need to see. It's like, this was the first step. The interest rates are coming down. That's showing signs, they're heading towards the pivot. They will continue to come down, even continue to come down through 2026. But the key, when all of our bags pump, when it's all full risk on, is when we're in quantitative easing. And that's what needs to happen. And that's what Trump wants to see happen sooner rather than later, which is why he's pushing for fast interest rate cuts so that they can get this refi done. I mean, he came out with this statement here. Jerome Powell just cut interest rates by a tiny 25 basis points. Wow, what a genius move. Said no one ever. Total idiot. Could have been 100, could have been 200. If I were running the Fed, we'd be cutting rates faster than Sleepy Joe can eat an ice cream. Can't get brain freeze if you don't have a brain. Let's pick up the pace. Jerome, this is the big line. 100 basis points by next meeting or you're fired. So obviously he can't really do that. But that's why he's really turning up the heat for rates to come down quickly, because we can't afford to refinance. So imagine, if this is just, you take it to a consumer type financial situation. Imagine you can't make your payments for your mortgage. You can't. You're about to, your spouse just lost their job. Okay, so now you've got less money coming in. You can't afford rent anymore, but you got to keep everything going. And you need to take out a home equity line on your house, but you can't pay the current rate. You say, oh, my house value is up higher, but I can't pay it anymore. You beg in your bank, like, give me a better rate so I can refinance this thing, get that cash out, and keep this Ponzi going. That's what we're trying to do, and it will happen. They won't let the Ponzi crash. This is a confidence game. The reason the Fed is reducing the size of their balance sheet is because they know what's going on, and they don't want to have the exposure. They are a private bank. They don't want to get wrecked in the process of us going away from the dollar as a reserve towards Bitcoin as a reserve. I found it somewhat poetic that they're literally having meetings in Washington right now with the leaders of our industry about setting up a Bitcoin strategic reserve while Powell's out there doing his song and dance. He said, well, if you're renting, good job. It's actually much the best spread ever for owning versus renting right now is it's a good financial decision to be renting. I'm about to be renting too. So.
I considered it. I definitely considered it on the move. I mean,
so I said this a little bit earlier. Interest rates, you can go look throughout history, look at the data. Interest rates are a political talking point for the most part, but they're not necessarily connected to housing. Cutting interest rates 50. I mean, they're connected, but they're not necessarily indicative of what's going to happen. You can see affordability go up and down with a pretty consistent 6-ish, or 4-ish% where it is right now, isn't very outside of the median or mean of where they've been throughout the history of the Fed. That being said, I do think the Fed is mostly noise. I miss the days when nobody in crypto talked about the Fed. But the other thing that got me going was how many times he said unusual situation. This is an unusual situation that they're having to navigate. And it's because we're at the end of a debt cycle. We're at the end of the dominance of the US dollar. And they said it without saying it loud and clear. Stagflation isn't coming. It's freaking here. It's here. The hiring rate is very, very low. They called him out and they said, are you ever going to achieve that inflation target that you're setting of the 2%? The answer is no, they're not. It's yes, it's unrealistic. They've abandoned that target by cutting today, whether they're admitting it out loud or not. So, we're in stagflation. Inflation's here to stay. And the hiring rate is very, very slow. We're going to continue to see that with efficiencies with AI and tech continuing to grow. And it's going to be a world where the rich get richer and the separation of class gets bigger. The middle class will disappear. This is what we've been talking about on this channel for a long time. And if I was not in Bitcoin, this would be a scary thing to hear. The beautiful thing is, the best thing you can do with all of these macroeconomic conditions is be in Bitcoin, be in commodities, whether it's gold, whether it's Bitcoin. If you like silver, fine. I love Bitcoin. I like gold. I'm less in real estate now, especially in a month from now, than I've ever been. And I'm very happy that the play is to buy Bitcoin regardless of the situation. So if you're here and you're watching this, you're in the right space. So
look at the DXY. Look at the DXY on this. Not doing well. Not doing well.
I think I saw some dollars lost 10% of its value this
year.
Which is crazy. That means if you got $3 million sitting in the bank, you just lost 300 grand.
Yep.
Yeah. People, I mean, it's 100% stagflation. It's, we've all been saying it here for months now. It's you got to expect. I think what people are like hoping on is like somehow the Fed's going to magically pivot. Guys, like quantitative easing, like we're in a form of easing is what's happening, but it's still not even easing because they're still reducing their balance sheet. So it's like we're at like a neutral position in a stagflation economy. And it's weird because Jerome Powell is trying to play the power figure of not folding to the political atmosphere that is Donald Trump's administration. But Donald Trump very clearly using Jerome Powell as a punching bag to blame him for any economic despair that exists currently in the system. Because he's the one he's spamming tariffs on the economy. Like it's a completely new monetary policy, fiscal policy shift that we've seen. So like the conversation here moving forward, this is why I keep saying that this cycle isn't the cycle to get rich quick. This cycle isn't the cycle to make generational wealth. It's the cycle to protect your capital. And you protect your capital with Bitcoin. You protect your capital. It could be gold if you're in traditional markets. If you make wealth this cycle, you need to rotate it into something that is just not even necessarily going to make you rich, but is going to sustain that value. That's why I keep telling people so much. Like, I'm not a Bitcoin maxi, but right now you should be a Bitcoin maxi because of the devaluation of the dollar. Now, I think everybody might have different, time links on, the dollar collapse. I don't think the dollar is going to collapse. I actually think the United States is going to remain dominant, but it's going to devaluate the dollar. And it's going to do exactly what TJ mentioned, which is while they are still the world reserve currency, it's destroying the middle class. There will not be a middle class. It's going to be the 99.9 versus the 0.1%. And so, just remember that moving forward, guys. You have the world's best economists, quote unquote, that run the Federal Reserve, that run the Treasury. You have economic projections coming from every single hedge fund on artificial intelligence and on economic expansion. And Jerome Powell is coming out here. When someone tells you guys, what's your educational background to have that opinion? Dude, education does not matter in economics. Every single top tier economist in the world is saying, we don't know what's about to happen. We are optimistic, but we don't know what's about to happen. And the only thing that is clear is the devaluation of holding your money in a government printed asset like the US dollar. And that's why you need to rotate into something that protects that wealth. So that way, no matter what happens in the next year, 2, 3 years, you're in a safe position.
Absolutely agree with that. I want to hear what you think too, Drew. But if you go back and look, because if you haven't yet, go study what happened when we shifted away from the British pound being global reserve currency. You're not going to see hyperinflation. It doesn't happen overnight. It is exactly what Josh mentioned. You're going to see a long-term devaluation of that currency over time, just in runaway inflation. And we're going to continue to see that. We've been seeing that. This is the marching beat of Bitcoiners from the beginning of time. Bitcoin has no top because the dollar has no bottom. That's 100% what's happening. And I saw earlier this morning, and it does ring true. What's tough is you've got boomers trying to navigate this who have no idea of what the current trend is. They've gotten really rich based on dollar devaluation over time and coming off the gold standard in the 70s. And you've got Zoomers trying to navigate it that have zero attention span and patience. And that's the key that you need right now is patience, because there will be opportunities. Drew, you've called this stagflation perfectly. And I'm really starting to believe it is going to be like what we saw in the 80s, where they're gonna at some point they will pivot into full easing. The Fed will be growing their balance sheet. The Treasury will be doing buybacks, and everybody will say the economy's booming and assets are going crazy, and we're going to see like what we saw in the 80s. And then all of a sudden it's going to come to a grinding halt. And the other thing that I was thinking about while this was going on, they were talking about jobs and really the internet and what you see with streaming, and the way you make money today is much more international than it's ever been with the internet. Zoomers a lot of them understand how to make money on TikTok, understand how to make money on social media, and you can create a self-sustaining business just on social media. That won't show up in any of the statistics they look at. So they have no idea. All of us, we're somewhat in there because we use ADP, but for the most part, people that are making money online internationally don't show up in any of these statistics. So you're like Josh said, they don't really know how to predict what's coming. But if you study this long enough, and I would argue too, especially modern education in economics is actually a disadvantage more than an advantage because they don't teach a lot of the actual Sewell and Friedman and a lot of the great economic minds of the world don't get taught today anymore because it's counter to the Keynesian mindset that they've all been indoctrinated into. So yeah, this whole debt is good and debt runs, more debt is better. It will come to an end at some point. You guys are in the right place. The solution is always buy Bitcoin. I do think we see more cuts. I think I kind of predicted that. I don't know where we're at, mostly neutral on. Yeah, we're back to basically where we were on the day. So it dumped on some of his tones, recovered. I am still bullish for Q4, by the way. Don't everybody freak out. I still think we see Bitcoin rally. It almost always follows gold. This is all the more reason for gold to continue going up.
I think I think people should even be bullish past that. I think it's.
Yeah, I do too. I think 2026
there's a possibility here because if it does repeat the stagflation economy of the 1970s and runs to the 1980 crash, there's a lot of similarities. And look at the energy market. AI is expanding. We need more energy than ever. So there's there's two things too that we didn't talk about yet that Jerome Powell kind of said is one. He said, yeah, looking at the economic, cycle, it doesn't necessarily mean that it's close to a bubble. I'm paraphrasing what he said, but there was a question in reference to are they worried about the restrictive policies hurting the economic expansion? And he said no. The other thing that he said too, which was very appealing to me, which tells you that there's, again, it's going to be stagflation for a few years, but a very key point he brought up was when he said that the employment numbers for immigrants is rising. That's a direct effect of the deportations from the illegal immigration for the minorities. That to me is very interesting because what you're now looking at is with the $5 to $10 trillion. I don't even know how much they've raised now from the administration with the energy sector and the infrastructure plays that will go into effect in 2027, 2028. You could get a rotation to where wages do outpace inflation heavily in 27, 28, which would lead us into a weird market where maybe we run up heavily in Q4 pullback. I like if we have a pullback, I think it has to be in 2026. And that's just simply because if wages start outpacing that and consumers start buying more goods still and accelerate the so-called bubble pushing in 2027, people need to be prepared for that. So it's just so simple. The easiest way to prepare is yourself, buy as much Bitcoin as you can. You're going to be, you're limiting your risk to the downside and you're exposing yourself to all the potential upside.
Exactly. Yeah. That's what's great is it's the best upside hedge and downside hedge that has ever existed. And this was, I meant to show this on the stream this morning and we didn't quite get to it. This was a graph of all the other times that they've cut interest rates when prices were at all-time high, when the stock market is all-time high. And what stood out to me that was interesting, there's a lot of this stuff that's in the 80s. So 80, 83, 83, 85, 85, 86. And look at some of these numbers, 7% within the next year, 15%, 21%, 24%, 28%, 16%, 33%. And so all of those were the 80s. And that's when they basically unleashed Wall Street, said, go at it, get after it. And they kind of knew, okay, this was, it wasn't necessarily a pure economic boom when it came to jobs. Inflation was still very high. The economy wasn't feeling great going into this. And they basically just let Wall Street go make a ton of money, removed restrictions. And, it's kind of like everybody jokes about it's crime season again. Like, I think we're going to see something like that. And we I'm not ruling out very bullish 2026, 2027 if they switch to an easing, like cut 2 more times. He basically said they're going to cut in 2026 as well. But when the Fed starts adding to their balance sheet, when the Treasury starts buying, we're going to see explosive growth in assets. And I agree, just accumulate Bitcoin and you'll be happy.
It might be like you're looking from the .com bubble to 2008, where it was just like this 8-year run. And there's the blow off top eventually, but that's after for probably what 2003 to 2006, it was primarily the institutions making all the money. And I think it's another similar position to where retail is going to get wrecked, man. Not because they, we're in a bear market, but because they can't participate in a bull
they don't have a
market.
job.
Because as we leg up, dude, it's going to be.
Well, that's
my biggest worry is that we get crazy legs up, TJ, and then it's like 6 months of consolidation, and it's like we go to 150, then come back down to 120, and you range for 6 months. And that's what's going to wreck retail, because as stagflation starts hitting us, they're going to be forced to capitulate to pay off debts, to pay off the cards, to refinance, everything you already mentioned. And that, I'm being optimistic. I hope that doesn't happen, but
I think it will. And because if you look at this graph here, look at the other 91, 91, 92, 95, 96. So it's exactly that same. If you look at history, you can almost always kind of see the story. And that, when I looked at this graph, it was like, okay, that was the confirmation I needed to see, okay, exactly what happened in the 80s, exactly what happened into the dot-com boom. And then unfortunately, like you just mentioned, we'll have a pump, we'll pull back in range. It'll be accumulation range for the ruling class or the elite class or the wealthy class, whatever you want to call them. And then right at the most bullish, that's when the bottom's going to fall out. And they're all going to be prepared. They're all going to be hedged, and they're going to be pushing retail in right at the dot-com. That institutions had already made all their money, and retail was coming in the dot-com crash. Retail was coming into real estate in 2008. Everybody was thinking, oh, this is what we have to do to compete. The same will happen with this, and then we'll do it all over again. So, but sorry, go ahead.
I'll give you my take here now.
Yeah, I was going to say, I wanted Drew's take.
Yeah. There's a nuance to the situation, because in the 70s to 80s environment, the average house was $50K, but the average salary was like 25 to 30K, right? Now the average salary is right around 60, but the average home is $450,000. So a massive discrepancy in earning compared to the cost of living, with a collapse to the upside in terms of the cost of your house now. Major difference. The housing market in the US makes up around $120 trillion. So if the housing market comes to a lock and a $120 trillion industry basically turns stagnant, it's not that the market, the S&P, needs to collapse for the great reckoning to happen. It needs to stop growth. The system is reliant on constant growth. So when I look at this situation, I think there's going to be a lot of similarities, but I don't think that the interest rates on mortgages are going to make it back to the 16-17% level. I think the discrepancy in the cost of housing and how it's increased is actually going to make the kind of ceiling on mortgages somewhere around the 12 to 13%. I do think that this situation is going to play out again, but given that the average cost of a home is $450,000, and the government has literally already been using our tax dollars to artificially keep homes off the market to stop a massive inventory from making it out there, I think that they're going to artificially keep those houses off the market with our tax dollars, mind you, and keep the prices as high as humanly possible, because they don't want a $120 trillion market to have a 30% haircut. So I do think that is going on. And right now, if this generally continues to follow the path that it already has been, we have about 6 months to a year of the Federal Reserve acting like they have the ability to cut interest rates. Inflation then takes off and goes to the moon, and then the hammer comes down on the markets at large at the end of 2026. Let the hammer come down, the chaos begin, the flash crash to Bitcoin, then the U.S. government comes up and buys the blood somewhere around $100,000 Bitcoin. That's what I think is at the end of 26. I think that the government's going to keep, we're going to do it. We're going to do it. And a bunch of these countries are going to be like, I'm getting in first, right? And then they're going to be like, just kidding. We're going to actually raise the interest rates to 15%, sucker. And then bam, right? You have that happen. The U.S. government buys up that floor. Then you got a Bitcoin reserve going to 2030, probably $1 million plus Bitcoin.
Yeah, I think that's the move. I think everybody, and so because I see some people over there like, man, new fear unlocked. Guys, like, there's no fear to have. Like, literally, just even if you're up 20%, 100%, 200%, like, just rotate into Bitcoin as much as you possibly can. Because I think the biggest play here long term, if you guys are like, I'm talking to our more mature audience here, like probably 30 plus. That's like, okay, we're talking 5-6 years from now, you're looking for your first house. The average home buyer in America, by the way, is like 38 years old now. It's like, it's gone up exponentially. I think there will be a rotation because once you beat stagflation, you get that wage market, you get that inflationary period, the interest rates cuts will come back, and you're looking at whether that's 2030 to 2032, probably a position where you'll be able to, if you're buying, everybody's goal should be one Bitcoin. I think if you have one Bitcoin by 2030, 2032, you can do what like we've done on this panel, which is like, you'll be able to borrow against that with almost zero risk and actually purchase your first home at incredibly reduced interest rates. And there's going to be a switch. But I think we all agree on the panel right now. I was even in a Twitter space with Grant and Gary Cardone yesterday. Like, the way to go right now is rent because it's just not affordable. You can invest way more money if you're renting and not worrying about the asset right now.
I just put in an offer on a house, literally like right before I started yapping there. I'm holding the other house too. I'm going to rent it out to someone good, but it's too low of an interest rate to let go of. And in the next year or two, I have to get used to the 5-6% mortgage rates. I can refinance if, this plays out 2028. The interest rates come back down to 4%, yada, yada, yada. Right now, I am taking the 10, 20-year outlook where I think inflation, the dollar devaluation is going to go ballistic, and this, $1,000 a month mortgage is going to feel like a current $300 mortgage. For people that are boomers that are walking around with houses that have like $300 mortgages and are renting them for $2,200, they're feeling good, right?
Yeah.
That's a good deal. So that's the approach I'm taking. I think hard assets, playing this market like Warren Buffett, using trash cash to buy hard assets like Bitcoin and homes, vehicles, Second Amendment items are going to be my play. And I think history is going to, it's going to rhyme. I don't think it's necessarily going to repeat because the housing cost is so much exponentially higher now in comparison to our income than it was the last time this happened.
Yeah, and that's because real estate has become one of the premier assets to store your value. And that's what's interesting to me is going to be, and it's interesting, I'd be interested to hear Grant's take on this as well. That's starting to change in the sense that now Bitcoin is becoming the premium asset for a store of value. And as that shifts away from real estate, it will take decades. This is not going to happen overnight, by the way. This is 10 to 20 year outlook I'm talking about. But that could impact housing affordability because right now, most of the stuff a lot of the inventory is just being used by very wealthy individuals to just sit on the real estate because you can't have it in dollars. You only want to have, you don't really necessarily want it in government bonds right now. You don't want it in, so there's limited options. You can either have it in equities, which feels bubblish. So if you want something that's long-term, low risk store of value that used to be bonds, those are actually looking a lot more risky these days. Maintenance and insurance and property tax costs goes up and up and up on real estate. And now for the first time ever, you've got a liquid, mobile, transferable, permissionless asset that you can take anywhere in the world with you that's holding value better than anything else. That's a better hedge than real estate. And so if people like me have figured out I'm better off long in Bitcoin and basically putting it all in Bitcoin versus holding a lot of real estate, I guarantee the BlackRocks of the world and the big money of the world are putting that together as well. And to me is the best case you can make that housing affordability will come back is if the wealthy elite don't use it for a store of value, but that's gonna take a long time. So
it's more kind of morphed into a government relationship with housing. So it's like Section
100%.
8.
I gotta hop off. I love all you guys. Shout out to the Disco fam. My parting advice is have good financial fundamentals, have principles that you stick to in the environment that we're heading into. Like Josh said, you do not need to be scared because we have a solution like Bitcoin. Get out of debt. The best thing you can do is eliminate your debt and hold Bitcoin, because if you are in debt, it's going to get harder and harder as these things go on. Have a positive cash flow and be debt free, hold Bitcoin, and you will be prepared to take advantage of the collapse, crash, whatever you want to call it when it comes. That's the stance I'm getting into right now. Whether it's next year, whether it's 2 years from now, I'm going to be extremely prepared whenever we do see a pullback to be accumulating Bitcoin. And
I'm going to call you TJ Buffett 5 years from now, bro. I mean, you're going to be
hey,
fine,
that would be a great compliment.
But your
and
points,
I would welcome
I
that.
think the real value creation here over the next few years is like just compounding your wealth. It's not like getting rich this cycle. It's like taking your Bitcoin, your hard assets, the value, the store that you created, rolling it into probably more real estate in the like 2030s. Then you get to roll that into more Bitcoin or rent. Like we're going to roll into it. I wanted to show you this though, dude. Look at this. Is the craziest trade ever, man.
Let me see.
The stop loss, bro.
No way.
Stop loss. I am going to zoom in on this. Yo, dude, I put it at 2.9799 right under because like they're gonna eat all the stops. Came right down to it, and we bounced back up on it. So we're up 1,300 for the day.
Holy cow!
That was the liquidation models, dude. But it actually got super bullish here.
Yeah.
On the liquidations, like while we've been live, it's like bounced back and forth, obviously. But if I zoom in on this,
we're looking good. I mean, you got those data points. Let's look at the money flow too. I mean, the 12-hour. Let me actually look at your signals first. So the liquidation's definitely looking like it's up, right?
So it's 117. If we break 117, it's crazy. We're probably going to go to like 118, 120, like pretty quickly. Because you can look at it on the liquidation here too. Let's refresh this now. So many orders have been opening up above towards 118, 118.5. So like it's when we went that, we called it live right here. We're like, we're probably going to drop down to liquidation. It literally went right down to that range, turned into support, bounced higher now. And now we're expecting that upside here. Delta spread looks good, which is kind of your money flow. If anybody's asking too, money flow is flipping quite positively. So I don't know. We may have caught like, that might've been the perfect, this is our stop loss. The yellow line.
That's insane. That was absolutely insane, dude. And like, look at this,
bro.
Let's pull up the other metrics that we use. I mean, you got your approach, I got mine. They kind of meet in the middle here. So the 15-minute on money flow is swooping aggressively to the upside. You have higher lows on the volatility waves. This is signaling pump. Okay. This is signaling mega pump. And then we look at, the larger time frames. And with that washout, I mean, this is something that I really, really like to see on the, I guess I call it a larger time frame because I'm a day trader, but the hourly volatility, the momentum wave on the hourly,
the larger time frame, bro, goes 60 minutes.
right. 60 minutes, large time frame. We are VWAP clipping to the upside, momentum still at the downside. This is a definite bull signal. Right. And I've already had a really good time trading today, so I'll probably relax and enjoy my 40% trade. Woo. Josh, good job on that XRP trade. People in the Discord feeling good as well. And shout out to the 15,751 people logged in right now. We're also, that doesn't even include the people watching us on the Arena, the Avalanche Social 5 platform.
We're probably about 20K.
Jesus, man. What a hell of a stream. Josh, I'm going to go eat some barbecue food, pick up my daughters, hug them. You're welcome to keep rolling here, man. But this has been an absolute banger of a show. Huge shout out to you, man. I'm going to head out here. I love it. Appreciate every single one of you out there in the chat. Make sure to share it. And I'm going to see you in a little bit here, Mr. Josh. I'm heading out.
I'll talk to you guys later as well. Peace out, guys.
All right. We're going to end it. See you. Peace out. Oh, wait. There we go.
We just wanted to take a quick second to shout out our sponsor, Arculus. They are a cold storage hardware wallet, helps you secure all of your digital assets for the future. Just tap this thing to the back of your phone and boom, you're in. We wouldn't be able to do this without them, but also wouldn't be able to do this without you guys, the Disco fam. You've supported us a lot over the years. If you want to support the channel now, just use the code DC20. It gets you 20% off this card. It's the #1 way you can support this channel going forward. Thank you for your support. We'll see you at the top.